All right, guys, welcome to this week's trade recaps. Today, I'm going to be going over all my trades from last week, as well as a recap of the month, because it is the end of the month now, and we are going into the month of February. And I want to talk about some things that I did good, some things that I did bad, and how I'm expecting to carry over into February to try to obviously improve, have a better month, and some of the mistakes that I learned, because of course, unlike any other trader, I am not perfect. I have made a lot of mistakes. This last week was not a great week for me. Unrealized, I am down on the week. Realized I did make a little bit of money. I am still in some positions that are red. The market obviously made a pretty big turn, but I want to be completely transparent with you guys. I'm not only going to show you the strong weeks where I make thousands of dollars. I'm going to show you the weeks where I'm break even, where I'm flat, where I'm also losing money, because that's the reality of trading. Not every single week, and even not every single month or year is going to be green in your trading journey, which is why you always have to think about the long term, learn from your mistakes, journal, which is what I'm doing right here, and go over all your stats and see what you could have improved on. So that's what we're going to be doing on this video right here. And don't let one bad week or a bad few stretch of trades define you. I had every single trade into the end of the week stop me out at either break even or stop me out for a loss. And even one of them was a pretty big loss on this day right here. And it's not anything that I did necessarily wrong. It's just the fact that sometimes the market does turn against you, and all you could do is manage your risk. And that's the most important part. So if I can make sure that I don't lose a ton of money, and the week before I was able to make a lot of money and my win-loss ratio is high, that's all that matters in trading. If you can make sure that you manage your risk, eventually you will catch some good winners, and that will carry you through. So you have to make sure that when you're trading, you have three outcomes for your trades. You can either have a small win, you can either have a small loss, or you can have a big win. You never want to have a massive loser, because that wipes out months and months of gains and weeks of gains for no reason. So without further ado, let's get into the stats. You can see my equity curve right here. Really nice move in the beginning of January, and then kind of came back down going into the end of the week, where obviously things kind of started to turn a little bit. And whenever you're swing trading, that's usually what's going to happen when the market starts to turn. It's going to be very, very hard to be able to hold on to your positions. A lot of things are going to be getting stopped out. You're going to be losing on unrealized profits on some trades that you had that you were up big on, but you never realized. And again, that's just a part of trading. You have to be able to train your mind to be able to accept that that happens. So let's look at this month's stats. Actually, this is a new month, so obviously it's going to be for last month, like so. So overall, 183,000 in net P&L. That is realized profits. My average win-loss per trade was 1.5, and if you guys remember me telling you I wanted to get this number higher than 2, so I'm very disappointed in myself that this was about a 1.5. Would really like to get this over a 2. And the reason why I think this was so high was this one bad trade that I had here on CRML, where my loss was pretty big. And that obviously dragged this down into the end of the month. And with market conditions like this, you know, it's going to be very hard to keep this higher, but that's kind of my goal into the year. I want to make sure that I keep this up and get this much higher, because usually my average is about a 3. So this month, obviously this was low. Win rate was obviously pretty good this month. Profit factor very strong as well, and everything else like that looks pretty good as well. I also want to show you my live account login so that you could see that, you know, this is actually the profit that I made on my account. A lot of people were requesting for this. So you can see this is the broker that I'm using right now. I do also have 2 brokers, but just to refresh the screen so you could see, today I am down, of course, because I do have some crypto. That is obviously kind of down. But on the week, you could see we had about a 4,000 week in terms of unrealized profits, and then realized was about 13,000, and that obviously includes positions that I didn't sell. But on the month, still up about $217,000, and you could see kind of the equity curve right here. So obviously not always going up, but never massive drawdown. If there is drawdown, it's managed because I'm not taking massive swings in the portfolio. Here, obviously, we had these few red days that were a little bit on the weaker side, and then into the end of the week on Friday, obviously I ended up losing again, and that kind of ended up coming down into the end of the week there. So just wanted to show you guys that as well. So without further ado, let's get into the trade recaps now that we got all the stats out the way, and I'll show you exactly what went right and exactly what went wrong. So this week, I really only had one good winning trade. The rest of the profits that I was able to lock in were just profits from swings that ended up carrying over into this week. So the first one was on the ticker USAR. This is a trade that I already broke down in terms of my entries last week, but I wanted to break down a new exit that I took on this one. So this one on Friday going into the weekend had some very big news with the Trump administration. The administration said that they're going to take a stake in USAR and also inject some money into the business to obviously help them get an upper hand in the business, because we care a lot about precious metals and minerals. And this obviously led USAR to gap up a massive amount going into Monday. So my calls did about 400% on the 24% gap up. And the reason why I trimmed here, which is something I normally don't do, I don't sell out of my position until we close under the 8 EMA, is because of the fact that we were extended from the moving averages. So this is something called extension away from the moving averages, or when a stock gets super extended from a moving average or a key level of support, that usually means it's going to come down to the mean. It's a mean reversal, right? So you can see the same thing happen here. When USAR got super extended from the moving average, about 41% from the 8 EMA, it came all the way back down right into this level right here, right? When it did the same thing right here, it was about, at the time that the moving average was there, but 44% move away from the 8 EMA, it's going to come down. This is called a mean reversion. So whenever you see a stock gap about 3 times away from the 8 EMA, usually a good time to sell into strength. And I'm really glad that I did, because if I didn't, my next sell would have been all the way down here once we close under the 8 EMA, and that would have been really not that great. So I ended up locking a bunch of profits in right here, which ended up making my week a lot better. And you could see, going back to the trade sale right here, 28.6K in realized profits that I ended up locking in. And I'm really glad that I did, because the rest of the position I ended up taking off for a big win, but obviously nothing close to what it was up here. So I wanted to just go over that sell rule really quickly. I know I went over the whole trade. If you missed that, go back to last week's recap. I bought it on the Undercut right here, and this ended up being an absolutely amazing swing, about 100% on the equity and about 500% on the contract as it hit the highs right there. So that was the ticker USAR. The only other winning new trade that I had on the week was on the ticker KTOS, and this was a really nice undercut. If you've watched some of the videos that I've been putting out the last month, you'll know that these have been working really well in the markets. So let's recap this trade really quickly. This was the setup that I was looking at, so we can go and see how I was looking at in real time. You had a really nice flag developing here on the stock. It was pulling in very slowly under the 8 EMA, and I started to notice on this day right here that it was breaking the previous day's low. So I had it marked out. I obviously had my alerts set as well. It broke under the previous day's low, and then it ended up reclaiming. And whenever that happens, I go down on the lower time frames and I see kind of what's going on, right? So what was going on here is a stock undercut, reclaimed with a ton of volume. Right here was a beautiful entry, which was my buy. Stop loss set to the low right here, and then this one ended up being a nice swing. I had some cushion into the end of the day, and you could see the next few days this thing ends up running really nicely. I got my first trim off right here into the previous day's high, which is usually your target on an undercut, and this ended up being a nice 30% win. It also ended up running into the end of the day, but because it did not hit my second target, which was right here, this actually ended up not being even a second trim, and the rest of the profits that I had ended up going to break even on this move. Now, the most important thing to understand when trading is that a lot of times this will happen. You will be in a position where you're going to make a lot of money, but your profits are not yours until you realize them. And this is why an exit strategy has to make sense, because if I ended up not selling the position at break even when it came back down, look what ended up happening the next few days. This would have ended up, taking me out, and I would have lost all my profits and then more, and this would have ended up turning into a red trade. So after the first trim, once my stock hits my first target, that is always when I'm moving my stop to break even, because the next time it rolls around, it's probably going to, stop you out of break even, and it'll probably continue to go lower. So stops save you, and also a trimming strategy saves you as well, because if you trim too early, you're going to be locking in profits too early, and then the market's going to, not really give you much on the winning side, and then your losers are going to be very, very big. So this is a nice one to study for an undercut. Of course, the market has to be cooperating as well. Undercuts are not going to work when the market is downtrending. If you're playing the long side, and the market has 3 red days in a row, it's going to be very tough to see a lot of progress on the positions that you're in, which is kind of what was happening to me all week. The next trade that I took was on the ticker EOSC. This one, unfortunately, I did size a little bit bigger as well. This was kind of like my normal size position. I was having a lot of traction in the market. A lot of positions were working, USAR, KTOS, and I started to kind of want to get some size on in the market. And my undercut strategy was working absolutely beautiful as well. But again, the market has to cooperate as well when it comes to trading, right? So sometimes, even if you have the best strategy, the best entry, and the market's not cooperating, it's going to be very hard to get traction on your positions. But what I was seeing here was a very similar look to KTOS. You had a stock that was uptrending, went about 45% higher. It pulled back off the highs, down about 3 days in a row. I ended up seeing that it was undercutting right there on this day right here. And then what I ended up doing is waiting for it to reclaim. Right here was the reclaim. You can actually see even volume coming in as well, which is exactly what I want to see. Right here was my entry. Stop was at the low. And unfortunately, it just did not end up getting enough momentum to have a nice undercut and rally. This would have been my first target at previous day's high right here at 16.28. Right here, it ended up stopping me out. I took a 10% loss on this one, which was awesome because obviously I had a little bit of size on it. So I had about $40,000 position, took a 10% loss, so $4,000. And that's not too bad for a potential trade that can make me over $100,000, right? With USAR, I had pretty much the same risk, about $4,000, $5,000. And that trade ended up making me about $100,000 in realized profits just to start the year. So you want to always make sure you're risking $4,000, $5,000, $10,000 to make hundreds of thousands if that's what your account size is at, or if it's smaller, risk $1,000 to make $10,000. Don't be putting yourself in a position where you're risking $1,000 to make $1,000. That's a 1R, and it wouldn't make sense for you to be able to trade like that. And if you continue to trade with a really low R, it's going to be very, very hard first to get any traction on your account, grow your account, because your winners are way too small and your losers are going to be a little bit too big. So that was a trade on EOSC, losing trade right here as it broke the low. And then this thing actually ended up the next day making a massive move up, and it undercut the undercut on the daily, right? So it ended up making a really nice reclaim right here. And actually I could have taken this as another re-entry, right? So right here as it kind of got back up, that could have been a re-entry. But at this point, we were watching the market, and if you guys look at the NASDAQ QQQ, it was very weak this morning and kind of pulling back. So I just had no kind of reason for me to take any positions on this day. So I ended up missing this kind of nice move back up, which would have actually hit my first TP and even potentially got into the second. But obviously the next 2 days, this ended up coming back down. So this happens a lot. Sometimes you'll get stopped out and the trade will end up working. You don't want to think about these things too much. The only thing you could do is look for a potential, re-entrance. But the worst thing to do is dread on something like this. The past is in the past. The trade is already done. Move on to the next. Yes, not every single time you stop out, the stock's going to go lower, but the stop is there to protect you against yourself. It's there to protect you against the fact that you might take way bigger risk than you need to, and the fact that you want to keep your losses small, and that's the only way to avoid big drawdowns. So yes, sometimes you will be wrong when you stop out and the stock will end up going in your direction, but is it better to be wrong and not have regret that you ended up losing potentially thousands of dollars when the stock didn't go your way? Or is it better to manage your risk and use an actual system that works over a long period of time? I always ask myself that question, and most of the time I lean towards the fact that, well, actually all the time, but I lean towards the fact that that is how you should be managing your risk. Now, the next trade that I took was on the ticker BTDR, another undercut. So all the trades that I took were undercuts. I was telling myself I was not going to buy strength, and I did the right thing by not buying strength, because I would have gotten probably even way bigger of a loss if I did. And this is kind of what I was looking to do the whole week, just buy the undercuts. Right here, you could see BTDR undercut this day's low right here, undercut the moving averages. I mean, this is just really, really clean stuff, perfect price action. But again, the market was just not cooperative, and we ended up gapping down on data centers. And you could see right here was the undercut that I bought. So I bought it right here, undercut this low, reclaimed with volume, ended up buying it here, stop loss at low. Next day, obviously, you could see ends up taking me out the first 5 minutes. Stop out, no questions asked. Even if it ends up reclaiming later on, I end up saving myself from a bigger loss for no reason. So it did end up coming back up, but then later on, made a little bit of like a lower high and then went lower. And that's why stops, end up saving you. You need to be able to follow your plan, your strategy. Very, very simple trade on this one. Had the setup, had the undercut, everything that I looked for. Market wasn't really cooperating on this. But again, the loss that I took was only a $2,500 loss because of the fact that I had a very tight risk. And also by this time, when EOSC wasn't working, when KTOS, USAR, BTDR, all these stopped working, I started sizing down, and I made a big note in the community and my Discord, and I said, please size down because a lot of trades are not working, and it does feel like the market is becoming heavier and heavier. And whenever I see that, I usually want to size down and mitigate my risk a little bit in that case there. Next trade I took was on the ticker CRML. This was the biggest loser that I've had all year, and probably my biggest loss since last year of like 2020 when we had tariffs, when I had a pretty big gap down on that. Other than that though, everything that I did on this trade was really good. This is just one risk with swing trading. Sometimes you'll put yourself in a position to make big gains on moves, and sometimes news will hit you on the other side of things and you'll have a big move down. Here we obviously had news that the US government was taking off the price stabilization on precious metals, like the price floor. That ended up being potentially a fake news article, but the stock still looked like it wanted lower, so it didn't really care much. Regardless, the trade didn't end up working out. That's all I can say. Nothing that I can do to kind of merit the reason why the stock went down. But let's talk a little bit more about the entry. This was a nice undercut as well on Tuesday that I bought on the previous day's low and the 8 EMA. So I bought it right here, and I ended up layering this one with a few positions. So I bought February 20 calls, and I also bought March calls to give myself a little bit more size. This was before I had the losses on EOSC, BTDR, so the market was still moving well. I wanted some size on this thing. Ended up taking a nice win on the February 20 contracts after this moved about 7% on the undercut, and made about 50% on those. And the Marches I bought with a little bit of cushion around this area right here. And those are the ones that ended up being a pretty big loss for me. So the February calls, the next day, this thing ends up, not pushing up. It actually comes back down. February calls get stopped out, break even. Now I'm pretty much just in the March calls. And I was using this low as a stop loss. And at this low, I would have been down about 25% on the position, which is still a pretty big loss for me. And that's something that definitely I'm taking from this trade, was a little bit late to the undercut. Sometimes the undercut will happen way too far from the low of day to the point where using the low of day might not even make sense for your risk. And then obviously this day right here ends up closing at the lows. Now, usually I have a rule for two things, and this is something I want to go over really quickly for you guys. The first rule that I have is that whenever a stock doesn't give you cushion, meaning you get into the position and it's down into the close, I usually like to reduce my risk. The reason why is because if the stock does gap down like it did here, then you end up getting yourself into a bigger loss than you should have, right? Because you have no cushion to soften the blow of a big gap down. If you're already up 30, 20, 50%, if the stock gaps down, now your loss is going to be much more manageable. But if I'm down 10% and the stock gaps down pretty big, I'm going to be down 40, 50% on the options. And if you're trading the shares, you're also going to be down a lot as well. And that's the concept of cushion. So getting very good entries is important, because if you can get an entry near the low, it's going to make it much easier for you to be able to swing, so that all these little moves don't stop you out, or a big news event doesn't kind of get you out of the position. And on this day right here, I ended up stopping out of my February for break even. So I ended up reducing, held my Marches, which obviously in hindsight I probably shouldn't have done without any cushion at all. But I'm at least happy I reduced some size. Then obviously the news comes out right here and I get absolutely destroyed for about a 60% loss. So massive loss on that trade. Nothing I could have really done other than reduce it the day before to really avoid a bigger loss. In terms of dollar amount, it wasn't as big as it could have been. Obviously a 50-60% loss is still going to be massive. And, it happens to the best of us. I haven't been hit with a trade like this in a while. I think the last time something like this happened to me was like on HIMS on news. Other than that, most of the times when I get into big, strong, names, they gap up to the upside, right? And that's the risk you're willing to take as a swing trader. You're willing to risk a potential gap down, which happens almost none of the times, for a potential massive gap up to the upside, like the USAR, right? So this obviously gapped up 22%. CRML gapped down about, about 7%. So you're willing to take the risk of a 7% gap down and potentially catch a trade like this that ends up gapping up, 30% in your favor, right? So just remember that. Yes, for sure, with swing trading, you do take a little bit more risk if you don't have cushion into the end of the day for the swing, but you can also have a lot more reward on the other side if the stock ends up gapping for you as well. And also in an uptrend, usually you get gaps to the upside. Now, this did look like an uptrend, but of course, with the market pulling back, with everything reversing, this now is turning a little bit more so into a break of trend than it is a continuation of trend. So just keep that in mind. Now, when a stock gaps down below my level, right, because I was going to use this as a stop loss, the previous day's low right here, you have two choices, right? A lot of people just sell right at the open, which is fine as well because technically it did go under your level. I like to wait the 5 minutes to give the stock a 5-minute orb. The reason why is because sometimes after the first 5 minutes, if the stock is going to reverse, it's probably going to do it the first 5 minutes, right? So right here, I give it the first 5 minutes. It came down. I marked out the low. The moment it started to take out this low right here, I was out of the position. Reason why, again, is because a lot of times if a stock gaps down, sometimes it'll gap down in the first 5 minutes. It will reverse massively. For example, I saw this happen on Baidu a while ago right here. And I was able to get a really nice entry on this one by, watching for that 5-minute orb. So I'm going to show you guys this example right here on the ticker Baidu right there on this day. You could see in the morning, this thing ends up kind of giving you a big gap down. And then right off the first 5 minutes, massive reversal, right? So this is why I usually give the stock about a 5-minute orb to be able to come back up. But if it doesn't do it, then I end up taking the position. And again, pretty big loss on CRML, unfortunately. Nothing I could have really done to manage that better other than taking off maybe some risk. And that's part, is trading. That's the part that most people won't show, but I'll always keep it real and I'll always show you guys all the losses and all the bad stuff that ends up happening in trading, because it will. It's not always sunshines and rainbows. So keep that in mind. And the last trade that I took was on the ticker APLD. Now, by this time, I probably should have already known that undercuts weren't working, but I did want to try another position in case the market was starting to reverse, because if you guys look at the NASDAQ, we did have a massive hammer set up on Thursday off of the 8, 21, and 50 EMAs. So it was very possible that we could see another reversal off this spot going into the end of January into February, and a big move up. And I wanted to get positioned in at least one name that I really wanted to buy, and it was APLD. Now notice how on these pullbacks, the volume is incredibly low. This is what I usually look for whenever I'm looking to get positioned on a leader. If the stock goes up with high volume and then comes down with low volume, that's usually a very good buying opportunity. But again, if the market doesn't cooperate, you're not going to get any traction. So I bought this one right off the 8 EMA right here and the previous day's undercut. So I bought about 38.87. It was up a little bit for a little bit of the time right here, and then obviously ended up coming back down to the end of the day. Next day gaps up a little bit and then kind of comes back down a lower and takes the low of day out. And right here, when it takes the low of day out, I'm out. This ends up being another 15% loss. So kept it small, size small as well. And again, this is why stops exist, because they protect you, right? Sometimes the stock will come back down, end up trading your way, but when it doesn't, you want to avoid losses like this, right? When a stock ends up trending down and making a big move to the downside. So always keep that in mind. Stop losses are there to protect you, and it's always the smartest thing to do to be able to respect your stop loss. Now, I wanted to just talk about two things really quickly when it comes to trading, guys. Again, not every single week is going to be a winner. I want to be transparent with that and show you guys that. But you always have to zoom out. You always have to think about the bigger picture. I know a lot of people probably had a rough close to the month, and that's totally okay. The last thing you want to do is try to make all the money back, try to be too aggressive on things and dig yourself a deeper hole. If I'm able to weather the storm and I'm able to come into the month more sharp, the next month more sharp, know exactly what's happening in the market, let the market digest a little bit, that's going to make me in a much better position than I was into the end of the week, going with like a massive loss for no reason because I try to make things up. So always keep that in mind. I hope you enjoyed this video. I hope you learned something from this recap. If you're not subscribed to the channel, please do, so that you can see more recaps like this, more videos on undercuts, educational videos, my trading strategy, life, kind of like a glimpse into the life of a 7-figure trader and everything that I've done to get to this point, so I can help you guys do the exact same thing. And make sure to like this video so we can make more recaps like this, and I'll see everybody in the next video.